everyone, welcome back to ASX Market Watch and chart trend signals around the world. This is where we look at the entire world from a chartist's point of view to see which way 3 out of 4 stocks would be heading if we believe that 3 out of 4 stocks follow your overall index, which is usually how it works. Not always, but usually. And this week is extremely exciting because we're looking at the Elliott wave count on the ASX top 200. And I've been looking around for this sort of thing. No one really does this anymore. And it's just well, why not do it? I think it's good to know where our Elliott wave count is. We were absolutely nailing it there between sort of the last 6 months of 2010, doing really, really well. And things have started to sort of come to fruition again, which is good. And I'll show you why. Let's just jump straight into it, guys, because it's actually quite exciting, the ASX top 200 at the moment. What we've got very quickly is this is 2009 back here on a daily chart. We had 1, 2, as you know, Elliott wave goes in 5 waves. That's your third wave there. 4 around here, and then 5. So that's leading into the late 2009. So we had 1, 2, 3, 4, 5. At least this is the count that I see, guys. And to be quite honest, other people may have different Elliott wave counts. I respect that. There's no dramas there, no love lost. Usually I find that my Elliott wave counts tend to come to fruition. So, what can you do? I like it. And, I genuinely like Elliott wave. I think it's a fantastic tool as well. But it's not the be-all and end-all, of course. As you can see, this is probably the best part about the late 2009, early 2010, is this is your 5th wave right about here, right? This is the end of it. And what happened is we had A, B, C correction, but the B wave up here actually went above our wave 5. Now this rarely happens, but it does happen, and yeah, like it can happen in the Elliott wave world, and that's exactly what happened in early 2010. Now the reason why I tell you that is simply because what we had in late 2010 was we've got 1, 2, wave 3. Sorry for my tool, it's a little bit slow. Wave 4, approximately. Maybe it was around here. Either way, wave 4 was around there. And then we had our wave 5 right here. And what we've got is A, B, C. And as you can see, the reason I told you that before is the wave B has come above the wave 5 again. So pretty much the exact thing is happening on the ASX top 200 as it did in late 2009, early 2010. Now again, the significance of that, guys, is that if we have come to our end of our wave C, then what we're looking at is a new wave 1, 2, 3, 4, 5, which is an upward move. It's a bullish move, and that is basically a very good sign for stocks. So yeah, I mean, no matter what you hear and what you sort of see in the news at the moment, it is a little bit of doom and gloom. There are a little bit of things worrying the world at the moment, like, debt and all that sort of stuff. Even Australia is flirting with a recession, except for materials, of course, and resources. But you know what? Sometimes this Elliott wave count can give you a little bit of hope and say that we're starting to head into a new impulse move. Now, again, the reason why I have said that is that what we've got here is from the bottom of the bear market to the top of our recent bull move. This little section here, this little wave, which is a larger wave in itself, has found support at 38.2%. Fibonacci number, by the way, just from the Fibonacci number sequence. And if we sort of look at that as our wave 1, wave 2, then we've got our new wave 3 going on, at least potentially. What do we need for a wave 3? We need of a lesser degree, 1, 2, 3, 4, 5 waves, of course. Now, if this is complete jargon to you guys, I apologize in advance. I've got an awesome course on Elliott wave at my site. It is absolutely fantastic. Keeps it very simple, and it will, help your trading from this perspective. The only other thing I need to tell you about this is that we've got, this is from 2010 to 2011. This is the top in 2011. Where did we find support? At the 61.8% retracement. Now that is a very common support level for a wave 1 and wave 2 retracement, and that's basically what I feel that we're looking at here. What that means is that we're potentially seeing a wave 3, which is the longest wave of the entire sequence. Usually, the highest probability move is that wave 3 is the longest wave. Now, we've got, a really large wave 3 unfolding, potentially, and also a smaller wave 3 in the meantime unfolding as well. So this could be good news from an Elliott wave perspective. Now, of course, if the market breaks down below 4,450 on the ASX top 200, which is just here. If it breaks down below that, then of course this count that I've been telling you is wrong. So always keep your stop losses in place, guys. And if you want a more solid, sort of idea, then wait for a little zigzag pattern up like that. Just wait for a little zigzag pattern up. That'll give you solid confirmation that that this wave is underway, that it has given you a solid signal at the same time as your Elliott wave signal, and that's what I'm personally waiting for as well. When that happens, I'm jumping in all guns, basically. That will be the leveraging to the max, pretty much. At least that's my situation personally. So that is my Elliott wave count for the XJO, or the ASX top 200. I hope you enjoyed. Let's quickly check out the rest of the world, guys, because it's not rocket science at the moment. We've got the Dow Jones. This is the Dow Jones. As you can see, we've returned to bullish. Last week I said if we were to close above 12,400 here, then that would return to a bullish sort of sign. The trend would be bullish again. That's exactly what's happened. So yes, the market has returned to bullish territory. We've got, if the market does reverse, you might find, just quickly, because we do get gaps. See this gap here? Of course you can. There we go. Beautiful. There's our little gap. You might find a high probability move is that the market usually will fill gaps, because the market doesn't like gaps. I don't know why. I think people try to shake people out in this area here. But yes, you will find that usually the market will try and fill that gap and then continue onward from there. At least that's the highest probability move on the Dow Jones. So beautiful stuff there. The FTSE, again, exactly the same thing. We said if it closed above 5,900, then that would return to a bullish sort of move on the FTSE. That's exactly what has happened. Yeah, I wasn't expecting that to happen personally, but you know what? We've had this sideways movement. You've got to be prepared for everything, basically. Now, the next big level on the FTSE is 6,100. Be very careful around that level. But if we do get a little zigzag pattern on the FTSE like that, then that would be quite a bullish sign. I would be I'd be expecting it to sort of test 6,100, if not break through, if we get some a little bit of a zigzag pattern to head up from the FTSE. But that's your sort of early warning signal that we're getting a bullish trend on the FTSE in Europe. And next we've got the Nikkei. Last week we said that we already had that warning signal, the uptrend warning signal. That is exactly where we got it, at 9,677 approximately. Since then, the market's gone great guns all the way up to 6,900 approximately, 6,888. And yeah, basically the reason why we did that is because it crossed our beautiful trend line here, and it's made a little zigzag pattern up. So now this week it has made that zigzag pattern. That to me is a short-term entry signal on the Nikkei. Again, just be very mindful of resistance at 10,000. It's a round number, it's a psychological number, it's a number that people will tend to sort of want to sell at or find resistance at, so just be wary of that. But in the meantime, so long as your stop losses are in, that's a short-term entry signal on the Nikkei. And quickly, the Hang Seng, again, same thing on the Hang Seng, really short-term entry signal. We said an early signal would be, last week was our early signal because we had a bit of a trend change. Now we've got our sort of zigzag pattern up as well. This is a really steep trend line, guys, so just be mindful that it is a very short-term signal, and you will also find resistance at the trend line resistance at about 23,000. Okay, so that's just something to be mindful of on the Hang Seng index. And again, always keep your stop losses in. Make sure you don't risk too much, obviously, or know your own risk tolerance. That's probably the most important thing in trading and investing, is to know your own risk tolerance and to trade by it. Next, just really quickly, is the Shanghai. Last week, again, we had our trend change warning. and the market has sort of gone sideways in a consolidation pattern since then. That can be seen as a good sign, but we'll just have to wait and see, because we want it to close above this level here, above 2,780. If it closes above that, that's your short-term entry signal on the Shanghai Composite, at least for me personally. And until then, yeah, as I said, keep your stop losses in, usually below the previous trough, or if you wanted to get really low risk entry, and by low risk I mean the risk between your entry and your stop, that could be your previous trough there, and that could be your a stop loss. That's what I'm trying to say. Use your words, Dave. Use your words. Yes, indeed. Last but not least, guys, is the BSE 30. And last week we called a short-term trend change warning right there. Yes, the market has continued up since then. This is, I mean, really, it just plays out exactly as you see it. If you know how to read the charts, you will know exactly how it will play out a lot of the time. And look at this beautiful downtrend line right here. Look at where the market has found support. Now, it's not exact, but you know what? Human emotion, it's not exact either. So you've got to be mindful of this. It will find support around this 19,000 level, or that's a round number as well, by the way. So, you know, Shazam. This is the psychological, or the psychology behind it. For some reason, it's the round numbers that get people. But yeah, again, that's where it has found the resistance. And if we get a little zigzag pattern like this, boom, then if we get a little zigzag pattern, like a higher trough and a higher peak, that could be very good news for the BSE 30. Yeah, so far it's gone well, and yeah, I expect and I hope that it will get above that downtrend resistance and make that zigzag pattern entry. That would be happy days for me. Again, if it doesn't, well, what can you do? Keep your stop losses in, of course. But that is the world from the chartist point of view. That's the economy from the chartist point of view. And again, a little bit of Elliott wave, which is absolutely great to look at every now and again. Guys, have a fantastic week, and maybe we'll check out Elliott wave again next week. You know, it's a good thing to check out every now and again, and it's also a good thing to see where the world is heading. Guys, happy trending. I will see you next week. Bye for now.